Welcome back to my morning report. Charles Process on Monday, the 25th of January, with me, Richard Perry, market analyst at Hand Tech Markets. Looking at dollar yen, and we've had this recovery in dollar yen, haven't we? This sharp 2-day rally on Thursday, Friday last week really has improved the technical outlook no end. I mean, you've got this broken downtrend on the RSI, sharp improvement there. You've got the MACD lines crossing over positively, arguable buy signal. Also the stochastics rising sharply, so really strong improvement. And not only that, we're up above, or we had been up above the 23.6% fib level, which was a base of resistance around 1850. Now what we have seen today is a slight retracement of that move, and that's come around, interestingly, that 1875 mark. 1875, bit of a pivot, got to 1887. So sort of 10-12 pips over the top, but still I think that is a big pivot line in place that you need to be looking out for. You've seen these momentum indicators rolling over, the RSI rolling over, stochastics and MACD also rolling over, and you've sort of arguably completed a small top pattern, which to be honest has been done on the downside. Probably gives you about 1810 as a target, probably not far off it. So you sort of playing out this minor correction as these indicators unwind. Now the big test I think is sort of still to be seen, really. I mean, you'd argue 1785 is your first line of support, which is that reaction low within the uptrend, and then beyond that 1740 to 1720, which is a sort of a pivot line. Certainly 1720 comes in as a basis of support, as a pivot, but between there and 1740 you've sort of had sort of 20 or so ticks of key pivot in the last sort of few weeks, really. So that is a level that I'm looking out for today. If you sort of continue to drift backwards in this move, I'd say 1740 is a key line of support, especially also with the moving averages around that point as well. So I think it's, generally speaking, it is an improving chart. Obviously today's chart move at the moment is a bit disappointing, 46 down on the day. It's sort of unwinding some of this move, but it's already been a pretty big move, isn't it? About 16 figure up to 1885. It's a pretty big move already, and it just shows the sort of fragility, I think, in these market moves, because you get such thin market trainings, thin sort of big volatility, and that is just indicative of markets that are pretty fearful and not really sure what they're doing. So lots of crazy moves that we're still seeing playing out. So I would still look to probably maybe even lock in some of that profit that we've had in that run higher. Maybe look to get into maybe new positions if you find support around that sort of 1720 to 1740 area. But I mean, it certainly looks at the moment near term as though the support is coming in around that sort of 1780 towards 18 figure area, and if you break below that, then that's it certainly would continue the correction, but not quite out of the woods yet in terms of the recovery. Still a big strong barometer for market sentiment, I think, on dollar yen, and the fact that we're trading lower today is not positive for market sentiment generally, but with that in mind, I wish you good luck in your trading, and I'll speak to you later. Thank you.